You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again for TWIFO, This Week in Futures Options, a program where we break down all of the action over there at CME Group. So we're going to talk about, you never know what products are going to make it on the show every week. You got to tune in. Maybe it's ags, maybe it's metals, maybe it's crypto, maybe it's FX, maybe it's equities, energy. You never know. You got to tune in every week to find out. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting network upon which so many of you are binging these days. Remember, if you're on the on-demand side, you like what you hear, all we ask is that you keep rating and reviewing. It does help all the new folks continue to discover the network, and indeed, they are legion. And, of course, if you want to go above and beyond, you want to get this show live in your ear holes, everything else we do live in your ear holes, as well as, of course, exclusive content coming at you a couple times a week, as well as giveaways and a whole bunch of other fun stuff. TheOptionsInsider.com/pro is the place to go. And, of course, we welcome all of you out here with your questions and comments. Keep sending those in. You know where to find us at Options on most of the major social media platforms. It's probably the easiest way to get at us. Questions at TheOptionsInsider.com. Also works if you're one of the cool cats in the secret club. You can ask your questions live. You always get bumped to the top of the list. And let's see who's joining me on the old TWIFO program today. Holding down the CME Group and FTSE Russell hot seat, our old friend, Mr. Todd Colvin, the Senior Vice President of Global Institutional Sales and Business Development over there at Ambrosino Brothers. Todd, welcome back to the TWIFO program, sir.
Well, thank you, Mark. It's great to be back. There's a lot going on in these markets, and there's more to come in the days and weeks ahead. So great to be here.
Yes, a lot to get to, so why don't we do it? Let's kick it off the way we always do. It is time for the Movers and Shakers reports.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report. This is indeed the portion of the show where we break down everything lighting it up to the light side, a.k.a. the upside, and to the dark side over there at CME this week. If you guys want this report in your hot little hands, you know where to go. If you follow us at Options on Twitter, or indeed if you follow CME Group, they will always tweet it out immediately ahead of the show every week. That's one of the few premium reports you guys can get access to for free over there from the folks at Bantix. Of course, if you like these products, if you listen to this show, you owe it to yourself to go check out the full offering over there at Bantix.com. BANTIX.com is the place to go to dive deep into Quick Strike and all the other cool stuff they have to offer over there. All right, Mr. Todd, you know the deal now. Where should we begin our journey this week? To the light side or to the dark side, sir?
Mark, let's take a look at the light side to start things off today.
All right, that's a good choice because this chart is mostly green. It looks like we could probably do a bottom 12 maybe, but that would be kind of stretching things. Everything else is pretty much green this week, listeners. Let's see. Number 5 to our upside movers this week. We have the E-mini NASDAQ up 5.85%. Is that the only equity leading the charge this week? Heck no. A lot more equities in the green this week. Number 4, the E-mini mid-cap S&P 400. Don't talk about that too often. Up 5.98%. Is that the top equity? Nope. It has been usurped by our old friend, the Russell 2000, up 6.32% this week. Quite the banger week for small caps. Maybe we'll head out there this week as well. Number 2, one of our top 3 frequent offenders. Usually any given week, if you guess one of these 3 products, there's a good chance you will be right. This week, coming in at number 2 to the light side, we have Bitcoin, up 9.45%. It was number 6 in the other direction last week, off nearly 7%. So quite a rock'em sock'em couple of weeks for Bitcoin. And number 1 with an enormous bullet here, a freaking 357. We have natural gas exploding to the upside, up 22.18%. It was number 1 in the same direction last week, up 7.35%. So it has been number 1 to the upside for 2 weeks. Nat gas, one of our other frequent offenders here. So we have, in our light side this week, 2 of our 3 frequent offenders dominating the tape. Can we find our other one, which is lumber, to the dark side? Let's find out. Number 5 to the dark side, listeners. Oh, it's lumber. Off 5.78%. So it is another rare week, listeners, where we have all 3 members of the triumvirate present in our movers and shakers this week, followed by number 4, out to the beans again. This time it is soybeans, off 11.5%, followed by number 3, still hanging out in the beans, soybean meal, off 12.41%. It was number 2 in the same direction last week, off 5.81%. Number 2 is the Eurodollars, off 13.45%. It was number 3 in the same direction last week, off 7.8%. And number 1 to the dark side this week, once again hanging out in the ags, it is corn, off 16.01%. So a rough week for the green stuff, a strong week for the sticky stuff, and a whole bunch of other fun stuff like the equities having a good week as well. But I think because it is one of our frequent movers and shakers, Todd, and because it is dominating our light side yet again, we have to start in energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody, welcome to the world of energy. You know where to go. Drop into that drop down over there at cmegroup.com/TWIFO, TWIFO. Pull up that drop down for the asset class. You're going to go down 3 to energy, over to product family, over 3 more to nat gas, and then we're going to hang out there first. Mr. Todd, a lot's been going on in the world of energy. You got the Texas tea, you have the nat gas. What's lighting up your tape in the energy segment this week, sir?
Well, you can't go anywhere without hearing about this nat gas story. It's just not going away. It's the middle of summer. Typically, we talk about the nat gas peaks coming in the midst of winter when we're shoveling ourselves out of whatever snowstorm we happen to find ourselves in. But really, nat gas, it peaked in June. supposedly peaked in June, sold off down to July, got just above $5, and all of a sudden we're rallying again because these heat waves are cranking the AC. Not to mention the supply issues, which are going to continue. So a lot of fundamentals here, basic fundamentals driving nat gas. Right now, it is that old supply versus demand equation that we learned about in 8th grade. It is still there and it's still working, and it took us off the lows. And I got to be honest, looking at these nat gas moves, I don't know why you would want to be short anything here. I mean, it's a winner on one day and a loser the next in your face. So I think at this point, nat gas, you just got to sit back and watch. It is a very volatile contract, and it isn't going to slow down anytime soon.
Has all this volatility, has this gotten a lot of clients interested in nat gas over there? Or are they kind of, like you mentioned, is it almost too much vol? They want to take their ball and go
too much. This is almost a too much vol. There are certain strategies that you can put on which help mitigate that, but ultimately, nat gas is not for the introducing client. It is more for the seasoned traders, and it's going to continue to trade all over the place. Summer is, like I said, is usually the time when nat gas bottoms out. I mean, I remember summers where nat gas was $3 or $4, and it just sat in these ranges. And we haven't been below $5. Going back at least a year. So at this point, we've got, very, very high sensitive price movements. And if you're not in nat gas up to your eyeballs, you need to stand back and just watch this one.
These are no markets for the timid. That is sure. You're right. If you're not pretty well versed and steeped in nat gas, listeners, maybe a good time to be on the sidelines a little bit. We have had Carly on recently, Carly Garner, who said something similar along those lines. She's been run over a little bit to the upside here in some of this madness. Easy thing to do in nat gas these days. Listeners, speaking of what's going on out here in nat gas, another pretty active week. 460,000 contracts on the tape out here this week, listeners. That's a pretty active week. And of that, about 36% going up in the contract, the odd contract that has a whopping 5 days to go. So let's see if we can find a contract that is also active that has a little bit more meat on the bone. You know what? The rest of the contracts are pretty evenly split. So let's go out to September. That has 36 days to go. And by the way, nat gas, that front future, a little over 8.05. If we get out to September, that future at a 793 right now. The September contract has done about 12% of the paper this week. So the second most active contract out here this week. The vol out here, almost a 94, 93.90. That's off about half a point this week. That front contract going away in 5 days, the vol out there is an 86. In terms of skew this week, the puts 3.7, but they were last week, I should say, 3.7% cheap. This week, 5.1% cheap. So the puts getting a little bit cheaper this week, probably understandably so. And the calls last week, 9.3% bid. This week, 8% bid. So the calls coming in a wee bit as well. In terms of action, what was the most active contract out here this week? Well, once again, listeners, we are back in the realm of talking about the 10 calls. It was the 10 calls in August going out in about 5 days that were just lighting up the tape this week. 20,600 of those bad boys going up this week. Pretty active all week long. The most active day was today, 9,300 today. About 8,000 yesterday, 2,000 on Monday, 1,100 on Tuesday. Pretty much closing all week. So it looks like some folks may be deciding we're not going to get to 10 in the next 5 days. Either that or they're just blasting away at that strike to harvest what little premium is left before that contract goes the way of the dodo. Either way, 20,600 of these 10 calls. Trading it up for size this week, listeners. Followed by number 2, it was the 8 calls. That makes a little bit more sense. That is pretty much the at-the-money strike right now. They traded about 14,400 of those this week. The busiest day was yesterday, 5,700, followed by 4,600 today, 2,300 on Monday, 1,600 on Tuesday. Back and forth opening to closing all week, which makes some sense as we were flirting with this strike and blowing past it and dripping below it. Makes some sense if folks would be opening and closing around the at-the-money strike. And then followed right behind that, we have the 9 calls. So kind of a bit of a call strip, 8, 9, and 10 listeners. The 9 calls did nearly 13,000 contracts this week. The busiest day was Wednesday, 4,500 contracts, 4,300 today, 2,300 on Monday, 1,400 on Tuesday. So they all have one thing in common, is that Tuesday was a kind of a light day for all 3 of those calls. Looks like mostly closing on the 9 calls this week as well. So intriguing stuff, kind of a heavy call strip trading pretty actively here in August. Let's go a little bit beyond that, see if we find anything farther out that may be of interest here. Listeners, looks like a lot of 7 calls were trading across the board here too in July of next year, in August of next year, and in September of next year. The 7 calls doing about 3,500 contracts each, also trading in October 3,500 times about as well. So maybe it looks like a bit of a calendar. They were trading actively all week, actually. It is strange that the exact same number, 3,425, would go up in September and in October. So it looks like a bit of a calendar. Yeah, it's far too coincidental for it not to be related paper, listeners. And looks like maybe a it's a July, August, September, October 7 call. It's not even a calendar at that point when you have 4 months. It's more of a calendar strip, if you will, going up 3,425 times. Interesting. Let's see any other funky strikes lighting it up out here. Looks like that's kind of the lion's share of the weird stuff this week. Before we drop out of energy, really quickly, Mr. Todd, I'm sure a lot of your clients have been watching WTI. Anything catching your eye out there in the realm of oil this week, sir?
Well, WTI is also seeing its share of ranges, but really we use WTI. If you're not trading it, it's a great barometer for watching expectations for the global economy as a whole and looking at price action. Lately we've been hovering around this $100 mark, and then we see these big moves lower. So, right now it hasn't given away its hand totally, but the fact that we're well off those highs and the fact that we're seeing, continued pressure to the downside suggests that market's starting to fear this global recession that may be coming in the coming quarters on the heels of a lot of these central banks raising rates. So not necessarily, looking at specific areas to trade it, but looking at it from a macro perspective as an indicator.
Let's do a quick hit here in WTI. Not the most active of weeks for WTI. Only 295,000 contracts on the tape. Usually we see around 400,000 on a decently active week. Of that, 36% coming in the September contract, has about 27 days to go. WTI right around 96.5 right now. Listeners up nearly 2% since Monday's session. The vol out here a little bit shy of 50, 49.5, off about 2.5 points on the week. The skew this week, 3.6% bid to the puts. Last week they were 4.3% bid, so coming in a little bit. The calls last week, 2.5% cheap. This week, 3.1% cheap. So the calls getting a little bit cheaper this week. In terms of action, we've got the 110 calls. I said we're at about 96.5. The 110 calls in September leading the dance this week with 7. Actually, I take it back. It was the 135 calls in December, doing a whopping 17,000 contracts. That sounds like it's a vertical, and looks like it is. Listen, again, one of these weirdly tight 134, 135 verticals went up on Monday. 15,000 of the 134s and 17,500 of the 135s. It is not a roll, listeners, excuse me, because they're opening on both legs. And once again, the one strike wide funky vertical. It's more of a strip at that point. You're probably just buying both or selling both. But again, this is not the first time we've seen these 1 point wide kind of spreads / strips here, which again, it's something that's kind of unique to the upside in some of these futures options here. We don't see that as much in, let's say, the world of traditional equity options. But interesting stuff nonetheless here. Let's see if we see any other weird paper out here. That's kind of the weirdness. If we get beyond that, again, the 110 calls in September are, in terms of traditional activities, the most active this week, 7,300 of those. The big day was Monday, about 3,000, 2,100 today, 1,800 on Tuesday, and about 300 change. Wednesday, back and forth, opening to closing all week long. All right, Todd, we did a little foray into energy. Where should we head next on the show, sir?
Well, we talked about it. You talked about it in the opening on the light side. Let's look at some of those equities.
I had a feeling you were going to say that, sir. Let's go out to the equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the world of equities. You guys know where to find this in your drop down, pop out of energy. You're going to go down one slot to equity indexes, And then we have kind of an embarrassment of riches this week. We have the NASDAQ 100 up nearly 6% on the week. The S&P Midcap 400 also up nearly 6%. And, of course, the Russell 2000 up 6.3%. So a lot of action in the equities this week. Mr. Todd, what is lighting up your tape in the world of equities this week, sir?
Well, we keep a close eye on those E-minis. They tend to give you a pretty good look at what the market's doing as sort of a macro picture. At this point, volatility in the E-minis has kind of, I don't want to say cratered, but it hasn't really seen any real peaks and valleys. It's really been just sitting in a valley. Given the fact that we've seen all these shifts from the Federal Reserve, given expectations for earnings that maybe they've come in on the high side or maybe less weak in some of these cases, volatility hasn't really batted an eye. And as typically, as we see equities rally, volatility comes off. That's a pretty inverse relationship that stands the test of time. But ultimately, given the uncertainty of where we're looking down the road, maybe even a quarter or two, volatility seems relatively cheap here.
Let's see what kind of vol we are seeing out there. Like we said, we have a lot of equities lighting it up this week. Let's start somewhere we don't get a chance to talk about a lot, but it's lighting it up this week. It is the NASDAQ 100. Let's go on out there first. The NASDAQ 100 coming into the show today, 12,603, up nearly 5% just since Monday's session. So a rock'em sock'em week here for all things tech-heavy NASDAQ. A pretty active week, 135,000 contracts on the tape for the E-mini NASDAQ. Of that, of course, the front contract that has 1 day to go has done exactly a third of the paper. We are not going to hang out there. By the way, it is the 12,500 calls that are leading the dance there if you are so inclined, listeners. 5,300 of those have gone up this week. We've got a little bit beyond that, listener. Let's go out to the the September contract. That did 18% of the paper this week. And let's see, that contract, the vol is about a 27.5. That's off nearly looks like about a full point, about 1 point this week in terms of skew by 14.3% bid were the puts last week, 15% bid this week. The calls last week, 11.1% cheap this week, 12.4% cheap. And the action out here in September was, again, the 12,500 calls. That's a popular strike. 5,300 going up, expiring tomorrow. And in September, we have 2,100. The big day was Wednesday with about 1,800 today. The rest kind of scattered throughout the week. By the way, before I keep rolling, got so excited with the equities, I forgot to set the table from a vol perspective. So we're going to do that right now here, listeners, in terms of what's going on out here in the equities landscape. RVX, so the VIX of the Russell 2000, about a 28.55 when we kicked off the show, down nearly 3 points from where it was this time last week. In terms of VIX itself, so the S&P 500 at the money vol with some skew thrown in there, 23 and about a half. That's down about 380 from where it was this time last week. VVIX 84.43. That's down about 7.4 points from where it was this time last week. VVIX, of course, the volatility of volatility. A vol Q, so the vol of the NASDAQ, about a 27.81. Not that far away from what we were just talking about there in terms of the SEP vol for NASDAQ. That's down about 4.6 points from last show. That puts the VIX to RVX, so the S&P to small cap vol spread, a little bit north of 5, about 5.1. That's almost 0.9 of a point wider than it was this time last week. And the VIX to vol Q, so the S&P to NASDAQ vol spread, about a 4.40. That's about 0.8 of a point tighter than it was this time last week. So vol kind of moving around a little bit this week. Let's hop out of the NASDAQ now. Let's go up to our old friends, the Russell 2000. That's just going to be 2 notches below the NASDAQ 100. Pretty active week, about 20-odd thousand contracts here in the Russell 2000, even though it's not the most active week we've seen out here. Once again, like most equities, 27% of that paper going out in 1 day. Let's go a little bit farther out. Let's go out to the July. That only has 8 days to go. Let's go a little bit farther out there. Here we go. Let's go out to the week 3 August contract that did about 23% of the paper. S&P, the Russell 2000 right now, listeners, 1822, up 77 handles, or almost 4.5% just since Monday's session. So quite the run across a lot of the equities this week. The vol out here this week, 26.62, off about a third of a point. In terms of skew, last week the puts 11.8% bid. This week, 13.5% bid, and the calls 9.3% cheap. Last week, 11.7% cheap. This week, And in terms of most active contracts, it looks like it's the 1780 puts going out tomorrow, doing about 600 contracts. That was the lion's share of the paper, followed behind that by the end of month July 15 half puts. That's an interesting strike. Looks like they did a 15 half, 15 quarter put spread about 400 times on Monday. It looks like they were taking it off, so they were closing out that put spread. Interesting. I guess maybe the rally, they're thinking we're not going to get down there anymore. They're obviously taking their short put profits, or they're taking off their long puts. Well, not much juice left on those at this point, but getting what they can left out of those bad boys. And also have the 16 half puts going up in August about 300 times this week where the action was. All right, so intriguing stuff here in the world of equities. Outside of that, Todd, what other complexes are lighting up your tape this week, sir?
Well, I don't think you can go much further. You can look at some of these currencies, which have been all over the board, hitting some pretty remarkable levels over the last week.
The dollar, the euro, the yen, and more. It's time to explore what's happening in major currency options around the world. It's time to talk FX.
Speaking specifically, looking over at that euro, which had a big move since in the last couple of days, but also breached a very important level, and that's it traded below parity versus the dollar, and then was able to recover slightly after the ECB meeting.
How great is that? I wish I was traveling in Europe right now, Todd.
We'd be millionaires.
Yes, everything would be a nickel for us. It'd be like just old times again. Just everything would cost nothing.
I mean, the dollar at 20-year highs, and we haven't seen this kind of price action. It's also with the pound too. It's really the strength of the dollar here is really just taken over, and with the fact that these central banks in Europe are a little bit behind in their rate hike cycles than say the Fed, and they have some other issues internally. Clearly, the currencies are telling the tale of the tape, and right now, volatility, which had been moving pretty strongly to the upside in the euro, seems to have come off a little bit after the event, which is very typical of any asset class.
Well, we don't get a chance to hang out in FX too often, listeners, but we're going to do it this week. Pop out of equity indices, go down one slot to foreign exchange. Then we're going to go to the FX majors, and we're going to hang out in Euro USD, as you might imagine, because that's where a lot of the action was. And actually a pretty active week. 58,000 contracts on the tape for Euro USD this week. So nothing to sneeze at out here this week. And of that, looks like this is kind of like an equity. There's so many very near-dated contracts going away. But of that, 35.5% of that nearly 60,000 contract listeners going up in the looks like week 1 August contract that has about 15 days to go. So we're going to hang out there, listeners. The vol, by the way, if you're wondering this, you mentioned we were just below parity. We're still hanging out right around parity. 1.02 right now is where that Euro USD spread is hanging out. Man, I wish I was just doing the tour of Europe right now, listeners. Instead, I'm talking to you here from the Southern studio. In terms of vol, the FX landscape has never really been synonymous with volatility, and that remains the case again this week. 12.25 is where we're hanging out in the Euro USD, off about half a point. In terms of skew, last week the puts 7.6% bid. This week, 7.9% bid. So getting a little bit more juice in the puts, and the calls last week, 5.1% cheap. This week, getting a little bit cheaper, 5.5% cheap. And let's see, of that nearly 60,000 contracts, let's see, what was the lion's share? I love the strikes out here, by the way, listeners. They're all pretty much based around that, that parity concept. So you're going to see a below or above that one level. And here we are right now. Looks like the biggest, most active contract this week was not in that front contract. We're going to go out a little bit, actually, to the contract going away in 50 days on September 9th. In particular, it was the 0.97 puts, doing 2,283 contracts. The big day was Tuesday, 1,600, and then the rest were kind of scattered throughout the week. It was opening pretty much all week long, so that kind of what you were talking about earlier, Todd, with how we were flirting with getting below parity. Some folks were trading it up on these 0.97 puts here this week, listeners. If we get beyond those, let's see, any other big prints. The 1.06 calls going up in March of next year did about 1,000 contracts this week. 1.0125 puts did about 1,700 contracts this week. That's in the, again, going back to August, the first week of August contract that has about 15 days to go. Let's see, those puts did about 1,700 contracts, almost all of that on Monday, 1,600 on Monday, and then about 100 on Tuesday, and not much else the rest of the week. So a big opening chunk of 1.0125 puts going up on Monday here on this August week one contract. So a lot of funky paper here, as you would expect, listeners, given the kind of action out there. Have you guys been lured to FX by this kind of unprecedented action in the dollar, listeners? Has this made it more attractive to you? You know, normally FX isn't the most exciting place to be slinging options, but these days we're getting a little bit of action out here, listeners, which makes things a little bit more intriguing. Hit us up. Let us know if you guys are slinging yourselves a little bit of the old FX out here. All right, Todd, I know this is your favorite complex, so I'll spear you on this one for a second. But because it is our number one dark side mover, we got to kind of hang our hat out in corn. Next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the dark side of ags this week. In particular, we're going to go to corn. You know, it's an alphanumeric order, so it's ags are top of the list, listeners. Pretty easy to find. And then you're going to go over to grains and oilseeds, and also you're going to find corn. So stay right at the top of that list. Corn, of course, the big dogs in the ag complex. 495,000 contracts on the tape this week, so a pretty active week. Corn, by the way, if you're wondering, coming in at $575, off nearly $30 this week, or just 4.85% just this week alone. So they are coming for corn this week, and of that nearly 500,000 contracts, about a third going up in the Dees contract that has 127 days to go. We're going to hang out there, and let's see. In that contract, the vol, if you are wondering, it's about a 38, up about half a point. So if you're in the Todd camp, you think equity vol is maybe a little bit too light, well, then corn's saying, hey, look at me, a 38. You know, you're talking over a 10-point premium to a lot of the equity vol we were just talking about, listeners. So intriguing stuff out here in the ags. In terms of skew, a 7.4% cheap last week, 8.7% cheap this week. So the puts are coming in. The calls last week, 8.6% bid, and this week, 7.8% bid. In terms of the action, like I said, nearly 500,000 contracts on the tape. Looks like the big dog this week, the 700 calls in December, trading pretty actively all week long. About 4,700 on Monday, 4,800 on Tuesday, 4,700 on Wednesday, 3,200 today. A back and forth opening to closing all week long. And looks like right behind that we have the 650 calls, trading about 14,000 contracts this week. The big day for those is today, 5,300, 3,800 on Wednesday, 3,600 on Monday, and about 1,000 on Tuesday. Again, back and forth opening to closing all week long on both of these bad boys. And also, not to be outdone, we have the 800 calls in December doing about 13,000 contracts. The big day was Tuesday, about 4,500, 3,400 on 3,400 going up today, and then the rest kind of scattered throughout the week, also opening and closing throughout the week here. Todd, I know you're not the biggest ag guy, but have any of your clients been calling you guys up, interested in the ags, given how much movement we've seen over the past couple of months?
Well, when the corn prices were getting close to $8 and you saw wheat getting up near 13, it caught everybody's eye, but since then, it's been a real collapse in price. Corn down 20-some%. You've got wheat down 35%. We've seen a little bit of a bounce back in wheat, but corn's still struggling. And, a lot of this can be attributed to either whether it's liquidation, preservation of capital, or whether it's, looking for other opportunities. But it's a good macro look at where some of the money is flowing to and from. And in this case, it looks like they're running out of ags after seeing that big run up in the spring.
Well, Todd, I know you're also a big rates guy, so I think we can hang our hat out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. Get into that drop down, go from ags, go all the way down to the second from the bottom there, interest rates, then go out into U.S. rates. And then we can hang our hat anywhere we want in there. We have, of course, the Eurodollars, which are on our movers and shakers this week at number 2. To the dark side, of course, there are other places we can hang our hat as well. 10-year, 30-year. Mr. Todd, what is lighting up your tape in the world of rates this week, sir?
Well, I think there's a couple, but I think you always want to start with the 10-year. It's sort of the benchmark, and it really sets the tone. And volatility really made a big move higher. When we go back to prior to the June FOMC and the quick turnaround by the Fed to say, hey, we're not going to raise 50 in June. Where a market told us it was going to raise 75, and that was the ultimate rate hike. Things started to get a little dicey when you're talking about a Fed that's shrinking its balance sheet and not purchasing the treasuries that it had been. And that sort of threw a wrench, and we saw yields get way up there, like almost at 3.5. Now we're back at 3%. And while volatility is down slightly this week, it is still elevated to where we've seen it over the last several years and remains elevated. And I think will until we get through this rate hike cycle, the growth versus inflation tug of war we're seeing from the Fed, as well as some clarity on where this economy is going.
I was just scrolling through the rates complex while you were talking, Todd. Kind of a light week from a volume perspective. Eurodollar is not even breaking 1 million, 883,000. Can't remember the last time we saw Eurodollars that light. And the 10-year you were just talking about, Todd, a decently active week, about 1.6 million contracts. It may sound like a lot, but for the 10-year, doing under 2 million is kind of light, actually. So not a rock'em sock'em week for the rates from a volume perspective. But to the 10-year, we will go. You're right, it is kind of the benchmark there, Todd. And I said, even though it's a quiet week, still almost 1.6 million contracts on the tape. So doing a lot more than a lot of the other complexes we were just talking about combined. Of that, we're going out to the SEP contract. Looks like nearly half of that paper, 49.4% of that, about 1.6 million contracts going up in the SEP contract. Has about 36 days to go. So we're going to hang out there, listeners. The 10-year, if you're not following, listeners, is at about a 118 and a quarter. Coming into the start of the show, so kind of unched on the week. Not a big mover week for the 10-year. In terms of vol, again, you don't go to the 10-year usually for vol, and that remains the case again this week. 7.83 is the vol, so well below 10. That's off another third of a point, so the vol is getting cheaper out here, listeners. In terms of the skew, 3.1% bid were the puts last week, 4.1% bid this week. The calls, 1.4% cheap this week, 2.5% cheap. So let's see where the size paper is going up this week, listeners. It is in the 116.5 puts out here in September that we're doing some paper this week. 88,000 contracts to be precise, and pretty much all of that going up on Tuesday. 63,589 going up on Tuesday, mostly opening. Then we did 13,000 today, 7,500 on Wednesday, 3,600 on Monday. But the big dog day, obviously, Tuesday, just dominating the tape there, listeners. And then right behind that, we have the 118 puts going out tomorrow. So there is some near-dated paper going up, almost like an equity here, listeners. 1 day paper to go. 73,000 of the 118 puts going up this week. These were a little bit more spread out. They did 21,500 on Wednesday, 17,500 on Monday and Tuesday, and 16,600 today. It looks like mostly closing throughout the week on these 118 puts. So pretty active stuff there. Then we drop to number 3 here. We've got, let's go back out to the 1 day to go contracts. It looks like it was also on the call side. Yeah, 60,000 of the 118.5 calls going up this week. 31,000 today, 16,500 on Wednesday, 10,000 on Tuesday, and about just remnants going up on Monday. 60,000 total on the week. It looks like back and forth opening to closing. We don't have the numbers for today, but intriguing stuff here in the 10-year. You don't usually see that kind of near-dated paper going up all the time out here, let alone what we saw here this week, listeners. And then, Todd, we're cranking through all the complexes this week. I like it. I know you're a bit of a metalhead, so maybe we'll head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, let's get into the metals. Drop out of the rates. You're going to go all the way down to the bottom of the asset class list, listeners. You're going to hit the metals. They're probably going to hang out in precious, but we'll see. Maybe Todd has other thoughts. Todd, what is lighting up your tape in the world of the metals this week, sir?
Always gold. Gold always tends to be at the top there somewhere. Again, it really gives you a good, clear picture. Now, while gold prices have been in decline now, some interesting things happening in gold when you compare it to what's happening in silver. I know we don't like to crisscross our metals, but the gold-silver ratio, probably something that is hidden in the back of the filing cabinet that people don't really watch, is a great indicator. It peaked during COVID at 123. So that's a pretty incredibly high number. Bottomed out in February of last year at about 64, and now it's back to 90. So gold really outperforming its little brother silver over the last year or so. And while the dollar's up about 12% this year, the dollar index that is, gold only down about 6%. So gold is hanging in there despite the fact that we continue to have a lot of obstacles against it, whether it be higher rates, higher yields, and a stronger dollar. Gold is down, but should be down a lot more based on historicals.
Well, let's see what we are getting out here in the shiny stuff this week, listeners. Gold having a decent week, 173,000 contracts. Not the most active week we've ever seen, but nothing to sneeze at either. And of that 173,000 contracts, the most active contract looks like it's the contract going away in 5 days with 20% of the paper. So we're not going to hang out there, listeners. We'll go a little bit farther afield. Let's go out here to the SEP contract. That did 19% of the paper, so we can hang out there as well. By the way, gold right now, listeners, right around a 1720. Kind of depends where you're looking. That front portion of the curve, that front future, 1713. We get out to September, almost a 1721, about a 1720.9. That's up about 9.3 points, about 0.5% on the week. What is gold vol right now, you might ask? Not much, 1641. That's off about another 0.5 point this week. In terms of skew, we got 3.3% bid to the puts last week, 2.9% bid. This week's the puts coming in a little bit. The calls, 0.2% bid last week, so not a lot of love for the calls. This week, a little bit more juice, 1.5% bid there. And then in terms of the active contracts this week, looks like it is the 18 quarter calls going up out here in November that were leading the dance. They did 12,688 contracts. Interesting. 18 quarters. Looks like it might be a bit of a, once again, upside flies. We've got the 18 quarters doing 12,600 today. Also have the 17 halves doing about 7,000 today. And then we have the 1900s doing 6,500 contracts today. So it looks like we have pretty much a roughly 6,500 by almost 13,000, 12,600 fly going up. It's a 17 half, 18 quarter, 1,900 1 by 2 by 1 fly, listeners. Pretty symmetrical outside of that. Nothing else crazy to it. So another day that ends in Y, another crazy upside fly here in the shiny stuff. This one not quite as outrageous. Listen, this is the 18 quarters is the main strike, and it starts at 17 half. So this, compared to some of the other outlandish upside trades we've seen in gold, which are pretty much every week at this point, listeners, we've seen things well north of the 2,000 strike. So 17 half, that isn't the most outrageous thing I've ever seen out there. I can kind of get behind that one. Let's see what else we've got going on out here. We've got 1730 calls going out in about 5 days. These doing about 5,500 contracts, almost all of that today, 4,900 going up today. So a lot of interest in the 1730s going out in 5 days. Again, we're at about a 1713 in that front future there. So they got a bit of a ways to go to get to a 1730, but intriguing to see so many of those piling in there as well. Let's look really quickly if we see any other weird aberrant prints. The metals are known for those on occasion, listeners. We got the March 19 halves going up 2,000 times this week, as well as the 2300s and the 2200s going up 1,000 times each. All that today, actually. So if that's a vertical, that's a weird one. 19 half, 2200, 2300. It's almost 1-to-1. So strange strikes afoot yet again, this time in March, listeners, with the 19 halves going up 1,310 times, the 2,300s going up 1,000 times, and the 2,200s also going up 1,000 times today. Meanwhile, though, listeners, it's time to bring you folks onto the show, a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to your futures options feedback. Let me just pay off some quick questions of the week that we had on the show last week, then get your thoughts on this week's question. Last week, we asked you guys which spread with wings it's finding its way into your trading arsenal. Right now, I gave you three choices: Iron Condor, Iron Butterfly, Traditional Butterfly, or Other. And Iron Condor took it just barely, 43.8% choosing Iron Condor. Butterfly, which I thought would take it, getting number two with 37.5%. Ironfly, 12.5%, and then Other, 6.3%. This week, Todd, we're asking folks, we've seen a nice pop in equities and crypto. By the way, crypto, the one complex we didn't get to. We did just about everything else on the show this week. We did rates, we did equities, we did ags, we did FX, we did metals. We did everything you could think about on the show. Energy. So crypto, the one thing that didn't make it on the show this week, listeners. But we're asking you this week. We've seen a nice pop in equities and crypto over the past week. Are you buying back in at these levels, or is there still more blood to come? Gave you four choices. I'm buying equities here, I'm buying crypto here, I'm buying both here, or there's more blood to come. Mr. Todd, what are your thoughts? And then more importantly, what do you think our audience is voting for, sir?
I think equities is going to be a very mixed bag. I think a lot of those that maybe had gotten out at better, more profitable levels, when you got to the summer, when you got to the spring and the summer, and equities seem to be rolling. If you didn't get out then and you're still holding on, you're probably going to be a wait and see type. Cryptos are interesting, though. Bitcoin especially. We did dip below 20,000. Now we're back above it. That seems to be a very good barometer. If we get back below 20,000, it's probably got a little more to the downside than you'd hope. So I think more buying in the crypto stage here, not because I think crypto is going back to 60,000, but because of the well-defined support down at 20,000 in Bitcoin.
All right, let's see what the audience has on the brain, Todd. And right now, with about a day to go, listeners, if you're listening on the podcast, you will still have time to vote. Go to @options to make your voice heard. And right now, 57.1% saying there's more blood to come. So you're not buying anything here. Then you've got a tie for number two with I'm buying equities here and I'm buying both here. So cryptos and equities, both of them at exactly 16.3%. That's strange. And then bringing up the rear is crypto, Todd. So a bit of a mixed bag on crypto this week. Again, you have about a day left to go, listeners, if you haven't written in. A lot of folks weighing in. Daniel Hoban saying he's buying here and there is more blood to come. So he's voting for both, I guess. And then Marine Recon saying he needs a fifth option that he never blanking sold. So in which case, our condolences, sir. Hopefully you're doing some stuff to mitigate some of that pain. Let's get out here to this question. This is kind of an interesting one. I like the handle. Theta Noob. You get points for the handle here. This is an interesting one, Todd. Theta Noob wants to know. It's a bit of an epic treatise, so buckle in, Todd. He says, in an attempt to oversimplify futures trading, from my perspective, trading a futures product like the MES, so the Micro E-mini, listeners, with a 5-point multiple is the same as trading 5 years of an approximately $3,800, 5 shares, I should say, of an approximately $3,800 stock. Therefore, if I am long one MES futures contract, it means I am long 5, quote, shares. And if I wish to incorporate a strategy like a covered call to that, I can simply sell one micro E-mini call contract to be covered at a price target that I would like to get out of my long position and collect a modest premium while I wait. Now, I understand the major differences in product assignment, whether it's cash settled for the quarterly or futures contract if it's the weekly, and the price is determined by the VWAP, so the value weighted average price, listeners. However, boiled down to the basics, is a covered call on a 1 micro E-mini futures options contract approximately the same as a covered call on 100 shares of SPY, except for the notional value difference, margin requirement, assignment price, and product settlement. There's a lot of differences there. Thanks for taking the time to read my question. After reading it over, I realize it's a lot to unpack. Yeah, you packed a lot of living into that question there, Theta Nu. So basically, Todd, he wants to know if he buys a one lot of the micro E-mini futures and then writes a covered call on it, is it the same as him doing a covered call on 100 shares of SPY, sir? What do you have to say for him?
That's a lot to unpack there, Mark. I do agree with you. I think at this point, the future side gives you a little more exposure for a little less down. Obviously, you have margin requirements there, whereas the SPY, you're going to be actually paying the premium, and you're going to have to be, if you're going to buy an underlying and you're going to sell the call against it, the pricing is going to be a little bit different. As far as the question, is it the same as buying one micro E-mini versus buying one SPY? Am I correct in that?
Yes. 100 shares of SPY. He says 100 shares of SPY, which is well,
because if you're doing the calls, if you're doing the
yes.
calls, that makes it equal. Would it be the same on a cost basis, or is it the same on a notional basis, or it's the same on a movement basis? Because they're all. I mean, there's going to be some differences in there. I just want to make sure we're answering the question.
Weirdly enough, he understands that there is a notional difference, so he gets that. It's funny. He, on one hand, he acknowledges the many differences, the notional value difference, the margin requirement, the assignment price difference, and the product settlement difference. But outside of all those differences, he wants to know if they are approximately the same.
Without giving any sort of my fiduciary responsibility here is I don't want to give them any bad advice. They sound similar, and I'd have to break down the specifications of each of the contracts a little deeper, but they sound very similar.
Yeah, Theta Nu, but it seems like you're on the right track you've already pointed out most of the differences that I was going to point out to you. Like you mentioned, even the fact that you're talking about if it's a quarterly or if it's a regular, what type of exercise and assignment you're going to have there. So you seem like you know all the nuanced differences there. So yeah, I think if understanding all that, and I think sounds like you do, then yeah, I think functionally they are borderline equivalent, again, with the huge caveat of all the differences that you point out yourself, which are, of course, the notional value difference, the different margin levels, the different assignment price methodology, and the different settlements. If you can get past all those differences, then yes, for the most part, they are going to be functionally equivalent. That was an interesting one. You guys, we love you folks out there. You guys always bring it with your questions. All right, that's going to do it for this episode of This Week in Futures Options. Mr. Todd, I know your head's probably still spinning from all that craziness with micro E-mini versus SPY. But if folks want to reach out to you, check out what you guys have cooking over there in the land of Ambrosino brothers, where should they go? What should they do?
I can be reached, my Twitter handle at TJC1539. My Bloomberg address, tcolvin14 at bloomberg.net. And I think there's a lot, again, these moves that we're seeing, this is not the end. Despite the fact that we're seeing a lot of prices come off, we're seeing some things rally off the lows. This is not the end. There's a lot more price action coming and vol action coming as the Fed continues its onward and upward hiking cycle.
There you go. Check them out over there at Ambrosino Brothers. And of course, you know where to go to check out these reports for yourself and a whole bunch more. CMEgroup.com/TWIFO is the place to begin that futures options journey. Then, of course, from there, you head on over to whatever floats your boat, the educational content, some of the great research Blue and Eric and the rest of the team are doing over there on the research side. You could very easily lose many hours over there, but begin your journey, cmegroup.com/Twifo. And then, of course, you know where to go to learn more about all things small caps, recon. How does that impact the market? What's going on with the COVID impact on the market? What's behind this massive rally we've seen in small caps this week? And a whole bunch more. FTSE Russell, FTSERussell.com is the place to go to begin that journey. Of course, give them a follow on the old Twitter while you're at it as well, at FTSE Russell, all one word. On behalf of Mr. Todd and everybody over there in CME land and the FTSE Russell folks, and indeed myself, I want to thank all of you out there for listening today. We'll be back again tomorrow, noon Central, 1 p.m. Eastern for Volatility Views. And then after that, exclusively for all you cool kids in the Secret Club, we're back with Options Oddities to break down the week's worth of weird and wild paper on the options front. Then back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.